Hi, I'm Gindi from Create Finance. I'm one of the senior advisors here. We asked our followers on social media what they want to know about buying a property for the first time. Here are their questions answered. So Sharon asks, where do I start? Sharon, what I would do will be get a mortgage broker involved as early as possible. A mortgage broker will qualify you for that borrowing, so they will assess your income, they will assess your credit profile and tell you what products are available for you. Robs asks, how much of a deposit do I need? The specialist home buying schemes out there where you don't actually need a deposit at all. However, if you're looking to buy a standard property, you will typically require a 5% deposit of the purchase price. Once again, speak to a broker. Your broker will be able to tell you what products are available to you. So Grant asks, I recently took out finance on my car. Will it affect how much I can borrow? The answer to the question is, yes, it will, Grant. The car finance will be seen as a credit commitment. A credit commitment is classed as an outgoing. So the outgoing will be factored into the affordability assessment. The amount that you can actually borrow for a mortgage could be significantly reduced if it is a large outgoing. So yes, it will affect how much you can borrow. Before you go shopping for that property, speak to a broker. They can qualify you and tell you how much you can borrow for a mortgage. Sanchia asks, do you have to be self-employed for 3 years before applying for a mortgage? Sanchia, that is a mortgage myth. Historically, mortgage brokers would tell you that you need to have 2 or 3 years tax returns in order to qualify for a mortgage. However, new mortgage lenders have entered the market in recent times, and the good news is you only need to have 1 year's returns in order to qualify for a mortgage. Lucy asks, what documents do I need to apply? Lucy, the lender would need income verification. Therefore, if you are employed, they'll be looking for the latest 3 months pay slips. If you are self-employed, they may need either 1 or 2 years tax returns. They'll need to assess your expenditure by analysing your latest 3 months bank statements. Proof of deposit, so if it's coming from savings, they need to have 3 months of bank statements showing the deposit held within there. If it's a gift from a family member, they'll need to have a gifted deposit letter. Identity verification for yourself, they will need to see either a passport or a driving license, as well as seeing proof of where you're residing. So that could be either a utility bill or your driving license. You may need to supply more documents for your mortgage application. However, if you supply your income documentation, your ID verification, your proof of address, and proof of where your deposit is coming from, that's a good start. Ollie asks, how long will the process take? Ollie, the process normally takes between 6 to 8 weeks from start to finish. However, it's all dependent on seasonal activities. For example, if you've got summer holidays or Christmas holiday, the process can be dragged on for an extra couple of weeks. And it also depends on what mortgage lender you're applying with. Some mortgage lenders tend to be quicker than others. Some can be slow, unfortunately. So I say 6 to 8 weeks, but it can take longer depending on various factors. Gibby asks, I've had money given to me from a family friend for the deposit. Is this allowed? Gibby, I'll say most mortgage lenders will allow a deposit if it's being gifted from an immediate family member. When we say immediate family member, that can be mother, father, brother, sister, or grandparents. When it comes to family friends, most lenders have restrictions around this. However, the good news is there are some lenders that may potentially consider a deposit coming from a family friend. In order for the deposit to be accepted from the family friends may need to provide their bank statements to show where the money's originally come from, as well as their ID. So Gibby, yes, this is possible. There may be restrictions and there may be a limited number of lenders that may be willing to consider this. Jane asks, do I need a mortgage broker? Honestly, Jane, I would say yes. Mortgage brokers have access to a large number of home buying schemes, as well as having access to a large number of products. You could go to the bank, but unfortunately then you're only dealing with the bank's products. The banks might not have access to specialist home buying schemes. Also, their interest rates may be higher than what's available on the rest of the market. So Jane, from my experience, I'd suggest it's good to speak to a mortgage broker. So there you go, some first-time buyer questions answered. If you'd like to find out more about buying a property for the first time, please comment in the box below. And please check out our other videos around getting a mortgage.